Hello, I'm Dan Bucsa. I'm Chief Central and Eastern European Economist for UniCredit, based in London.
Paul Hallam, Managing Partner of GalCap Europe with Manfred Wilcznig and Marco Kohle in Vienna, Austria. This month would be our 4th year of operation. It's been very successful. We're in the Polish market for a little over 1 year with 2 commercial office buildings in Warsaw. So we're expanding on that, and we can talk about that more in a little bit. But at the moment, we're commercial office space, looking at residential, looking at the different residential components that are sort of specialty, like student housing, senior housing, social housing.
Okay, great. Justyna.
I'm Justyna Kedzierska. I'm heading the Warsaw office of Berlin Hyp, being a German mortgage lender. We are present in CEE, in Poland, and in the Czech Republic. Of course, the focus of Berlin Hyp is the German market. In Poland, we've been active since 2006, I think. Yes, correct. So it's been almost 14 years now. So yes, we've quite a history now.
Hello, my name is Piotr Noack. I'm Managing Director of ZEITGEIST. We have offices in Berlin, Prague, Warsaw, and also some projects in Budapest. We are focusing mostly on PRS, residential for rent, and it includes also the student housing. And we have today, I think, around 40 projects in the region, and everything, most of them are really dedicated for residential for rent or student housing.
Great, Piotr.
Good morning, Piotr Mirowski. I head up the capital markets team at Colliers in Poland.
Let's start with you, Dan, just in terms of the macro picture. I guess, given your role looking at CEE, maybe it would be useful just to look at the macro picture and how you see both Poland within that, but also, I guess, how you see CEE within the sort of more European and global context.
We have a bit of a bleak outlook for the global economy. I'll have to start by cheering you up this morning. So we think that global growth is not recovering in 2020. Actually, we're thinking that the business cycle is going to end in the US. And we're also thinking that the Fed will cut abruptly in 2020. In this environment where global trade is not recovering, so basically we think that inroads in this tariff wars between the US and China will be minimal. CEE stands out because it's much more stable than other emerging markets. It doesn't need the same level of capital, especially equity capital. So the fact that our equity markets are underdeveloped turns out to be an advantage in these times. And also because from an economic point of view, they start out at a much better level than the other emerging markets. So we're looking at a year when CEE will outperform the others in terms of growth, with Poland standing out. Poland depends less on exports than countries like Hungary or Slovakia or Czechia. And that helps in terms like that. It also helps that the fiscal impulse in Poland has been pretty strong in 2019 and will remain so in 2020, while in countries like Hungary, for example, is going to be negative. So it looks good. We're looking at a year when growth will very likely be lower, closer to 3% rather than 4% in Poland, and in the region overall around 2.6%. With very low interest rates, even though inflation is going to go higher temporarily, we think that by the end of 2020, it will come back inside the target ranges.
Okay, good. And I just wanted to pick up, and this is for anybody really, just in terms of, I suppose, what are the key trends that you saw in 2019, and I suppose that you're expecting to see going into 2020 and beyond? I mean, for example, last year, if I took last year, we did around 8 events focused on ESG topics, whether that's wellness, sustainability, carbon neutral, whereas for the previous 10 years, we'd done 1 per year. And I don't know whether that's an example of things that are changing, mixed use. I'm just wondering if any of you got particular things that you saw as key trends in your sectors.
Trends that you mentioned, Richard, are very much already embedded, particularly with regard to Poland. I think looking at the whole system, we are very well advanced, whether it's ESG, whether it's other solutions that are being implemented on the market. So I would think that Poland is one of the front runners and definitely sets the pace for the CEE region. But in terms of trends for 2020, I actually expect more of the same. I think, despite what Dan mentioned in terms of the slower macroeconomic context, I think the scarcity of other options for invest means that the capital will continue to flow to the region, and I think that the momentum will keep on going. We'll delve into that a bit later, but I think it is business as usual, despite the weakening context, unless there is a macro event that really throws everything out of the window.
Okay, good. And in terms of the, maybe let's pick this up with you, Paul, because you're investing across the region and you have invested in different sectors throughout. I know you mentioned there senior housing and student housing, but you've also been involved in office as well. I suppose, how are you seeing, let's start with your overall view of the region, looking at the real estate side, and also then your view on particularly the Polish market.
I should have clarified. So when GalCap formed, we use Austria as sort of a central hub of the wagon wheel, and then we work our way out in the CEE. So it's a pretty unique profile for what we've been told by the investors, and they like this. They take the Austrian stability, and then they like the Polish stability, and we bring in the Hungarian opportunities where we're able to, and then we're also looking in Czech Republic and Ljubljana and Bratislava. So one of the things that for better or for worse, one of the things that I can't help doing is taking an American city imprint and always putting it over certain markets here, because there are so many similarities. We don't see the political stresses to be so impactful on development. Our opinion is very similar, that the Warsaw, particularly Poland overall, but Warsaw particularly, is very positive going forward in 2020. We were aggressively looking for opportunities. We're very happy that we see I see a lot of partners here in the room who are bringing us things that we want to see. The capital doesn't seem to be too much of a pressure coming in. We don't see the reduction of that. In fact, starting at the end of last year, we started to see a lot more interest coming, and the phones started ringing, and people started asking us a lot more interesting and diverse questions about the market here. Last year, we were pitched on a lot of residential, and Marco and I spent several days touring about 15 different sites. The quality is extremely high. And so we would see that as a trend, and I'm pretty sure that other people on the panel will talk about their focus on residential. We would like to focus on it more. For now, we are in the line waiting.
Okay, good. Well, that may be a good introduction for you, Peter, because you are focusing on residential mainly. Let's just pick up your view also, I guess, on the trends in the sectors that you're involved in, and also how you see this, because you're also investing in Germany. So how you see this in comparison to the German market.
Yeah, what we see is definitely a lot of interest, let's say, for the niches like student housing. We don't see so much offers, and I think the capital and the money would like to buy more. This is also the reason why we are more and more developing, especially in Poland, projects than buying existing assets. We had a different situation in Prague when we started, because there we got the opportunity to buy one owner buildings ready for really renting, where we did just some refurbishment, but in Poland it's really tough to find that product at all. So here in Poland we are now more and more developing it, and we see the interest definitely there, and for more projects. And comparing it to Germany, of course, it was also mentioned already, when we see the percentage of renting residential in Eastern Europe, comparing it to Western Europe, it's a huge difference. Of course, it's also done by history, yeah, so that the Poles and the Czechs, they want to own more their flats than to rent them. But there's a change going on, and especially with this high pricing, yeah, when I look at Prague today, we have 4,000 euros a square meter in average, yeah, which is crazy if you look at wages, salaries, and income by family. So the people will be stressed out more into using residential for rent. That's definitely something to come up, and there we see a huge trend for the decade, and not only for the year, but I think over the next years it will show that there is a need for that, and there's definitely a huge lack of product.
Okay, good. And Justyna, just in terms of the financing side, is there anything that you're seeing in terms of the trends, but also as somebody who's then working within the real estate side, are there particular trends that you've seen over 2019 and you're seeing coming in that as a bank you're having to deal with?
Well, from the lender's point of view, the core markets remain, of course, the traditional market segments as well, as might be also expected, but I'm also glad to see that the banks have managed to develop, in fact, a new product for the alternative so-called asset classes. So, as you were just mentioning in general, for example, Resi for rent, last year we saw the first, I guess, maybe there were some more financings which I'm not aware of. We saw the first financing of such a project, and I believe that this is quite a success, taking into consideration that, in fact, there is no track record of this market yet. I mean, there is no one who locally really made this experience, because, of course, it's about the trends, as you are saying. There's a huge difference, of course, between CEE countries and Germany, and obviously, right now, we just need to see how this will develop, how the behavior of the let's say consumers or of the market will develop.
And is this, I mean, this is for anybody, does that indicate, therefore, that we should begin to see quite a lift in terms of institutionally? There's already a lot of institutional interest in these sectors, but actually as sectors, in comparison to somewhere like the US, they're tiny at the moment. So does that mean that this might be the sort of lighting the touch paper that really boosts these niche sectors? Any views on that?
Well, I don't think there'll be a major boost straight away, because obviously we've got the low base effect. But clearly, as you mentioned, Richard, the demand is there, which means that now that the conveyor belt of new product is in motion, I think whatever is developed, and to the extent the vendor wants to sell, that they'll get traction in the marketplace. What Justyna mentioned is that we've got now financing for PRS. We've got availability of financing for student housing as well. So it's clear that everyone is ready. The only piece that's missing is really the product. And I think this is the major constraint. Just like in the case of the size of the Polish market in general in terms of volume, the product is something that's missing, because there is the oversubscription is tremendous.
Regarding financing, we just refinanced part of our portfolios, around 100 million euros in Poland and in Czech Republic. And the interests of the banks were there. At the end, it's Austrian and German banks and financing lenders, because they know the product, of course, the best. But the money is there. So also the interest, when we talk to banks, even local banks in Poland, the interest was there, but they didn't know really how to manage it or how to see it, because you don't have the comparables. And then this is problematic, and we see it. We have now nearly 500 flats in Prague. And that sounds big, but if you compare it to German markets, it's nothing. Yeah. So, and when you see then the biggest deals in Resi for rent is in Ostrava, yeah, just because the product is there, was just sold again to Heimstaden also from Blackstone. It's over €1 billion, so the money and the financing is there, but there is nothing to buy. It's just not here. And this is, again, we don't want to be a developer, but when I look at my portfolio here in Prague, In Poland, in total Poland, it's just development, because there's nothing to buy.
But at the same time, it's good news for developers because clearly with the competition that's been created, I think, assuming that nothing else happens on the negative side, we'll see upward pressure on pricing. And I think across all asset classes, but as Peter mentioned, in the PRS and in student housing as well.
Okay, good. I wanted to come back a little bit. We went through with Mark there some of the positive macro elements that there are in terms of growth, which include capital and various others. From your point of view, Dan, how do you see the risks? Because you've obviously got not just risks to the British royal family, but also Brexit. But you've got things happening outside of that. You've obviously got also issues in France. You've got potential economic downside in Germany. How do you see those risks and also build in the political risks and how you see those from London?
This being the end of the cycle, usually we also get a lot of political noise. So the question is, who's going to generate the most this political noise? And obviously there's going to be some in Europe, but trust me, there's going to be a lot on the US because in the end it's an election year. The way we look at investors and what their focus is right now is that if we're right and there's no escalation in the trade war between the US and China, then probably this dollar strength that we've seen in the past couple of years has run its course. That means from here on, the dollar cannot really appreciate more against other currencies, the euro included. So that opens an opportunity for our region, because this region is seen as a euro proxy with a bit of a pickup, and that pickup is declining pretty quickly. But at the same time, for investors who want to diversify into the euro, and here you can think of anything. I know everyone has an obsession here with the Asian investors, but you haven't seen yet the Latin American ones, and trust me, they're coming. These investors will be coming here because they think this is a region that, in the end, it's going to give them a very stable return. And if you're looking at the performance, I'm looking at bonds because that's the asset class we're trading more. So if you're looking at performance in bonds in Central and Eastern Europe compared to other emerging market regions in the past 6 years, although the nominal yield is much lower in our region, 4 out of the past 6 years, CEE outperformed everyone else. Why? Because currencies did not tumble the way they did in Latin America, for example. And 2, there was a capital gain. In the end, if you're looking at euro yields for the Polish sovereign, they're almost below zero, actually below zero to almost 10 years, without QE. So I think we can expect this in all asset classes. Yes, there's going to be political noise. There's going to be a lot of noise. Obviously, you being in the Polish market will have a bias against Poland. You've got presidential elections as well. So there's going to be a lot of focus, but you have to keep in mind the bigger picture. What you think is noise in Poland, if you compare it to the likes of South Africa or Argentina or Brazil, is nothing.
I mean, that's interesting to see that view. And maybe that, I mean, what that does inform, I think, is because obviously everybody here knows the Polish market extremely well. And there's obviously risks that appear in the news in London, like the demonstrations about the judiciary. And that presumably is then all over the world as well. But what you're saying, Dan, by the sounds of it, is that actually, when other investors who are looking at bonds and then beginning to look at where they move their capital, if you look at it from that point of view, they're actually seeing CEE as one bucket, as an emerging market, and Poland within that, and therefore it's a better bet than the other options that they're looking at.
We're called the developed markets of emerging markets, and many investors don't look at this region as being emerging markets anymore, both in terms of stability and the actual nominal yields. So that's very likely to go on. It's going to stay like that. Then if you're thinking of CEE again compared to other regions, yes, it's true the quality of democracy is going down across the region, but let's not forget where we're starting from. So there are different rankings for institutional quality and quality of democracy that countries are ranked on. And this region is 1 point out of 10 above, head and shoulders above any other emerging market region in terms of quality of institutions and quality of democracy. So it is going down, but it's going down also in Asia, it's going down in many other places across the world, and we're starting from a much better point.
Okay, good. And as an investor, Paul, how do you see that? Because you're investing in a number of these areas. How much is that sort of political risk side something that you look at, or is it just something that you're kind of hedging against, or?
No, that's a really good question, and something that Dan said that you should always keep in the front of your head is the phrase political noise. And I actually feel like we should apologize to Britain, to the world. It's like, well, sorry, we screwed up your royal family, and sorry about that thing with Iran. So we have a lot of this daily anxiety in America on a minute-by-minute basis, and in no way has this ever affected development in Washington, D.C. If you look at the cities, Washington, Boston, and these are not, I think Europeans generally have a misconception about American cities and markets, and any of you who had lived over there through the 80s, the 70s, the 80s, the 90s, you would have actually thought that some CEE and SEE cities during the communist period were like holiday spots. None of what we go through has affected real estate development. Washington, D.C. was a backwater nothing when I went there in the 80s, and now it's a huge multi-billion-dollar powerhouse. The tiny little submarkets. There's umbrella issues that are sort of macro issues, and then there's micro issues, and I can pass this after this on to Peter because maybe he has seen the same trend in other markets like for example, Budapest. If you have a macro issue like your judges, okay, so the judges over 65 to 70 had to resign, and people protested, and then the government stepped it back a little bit, and they said something very positive about being part of the EU, and everybody was calm again. That didn't really affect real estate development. VAT issues will affect real estate development, and for example, we were looking for 1.5 years in another market where they had created a VAT benefit, and then the benefit expired in 2019. And everything ground to a halt with regard to the developers who were creating this project, which could be bought by investors. And so we are, in that particular market, not pursuing sort of a resi for rent scheme anymore. We're looking at that here in Poland because nobody has created any local regulations or local VAT problems that will expire or will impact the positive nature of the development in 2020 and beyond. That's kind of all I want to say about sort of the macro and micro administration issues. Richard and I were talking about this a little bit earlier, and I don't see any micro issues in Poland that would affect anything now.
Is anybody concerned about, I suppose, the views that are expressed about Poland from outside, and how are they perceived here? And I suppose the other part of that is, how are they perceived by international investors looking at the market?
So far, maybe it's the also the effect of tiredness to an extent, but this topic hasn't been brought up for a long time by investors. I think they've come to live with it. They understand it. At the same time, they appreciate that perhaps in other locations in the world, there are also some challenges. So as long as the macroeconomic background continues to perform, and Poland has been going from strength to strength, it is again business as usual. And I'd love to hear Peter or Paul, because obviously they've got the investor perspective from a advisory point of view. It hasn't had an impact, and judging by the amount of interest that's going into Poland, and that's from all across the globe, it will be the case for 2020 as well.
To add just, we had also some questions, of course, of our investors regarding in Poland when there were demonstrations or in Hungary or whatever. But it was never like, okay, then we don't invest anymore, or maybe they say, okay, in Budapest, we don't invest so much, but it's more economical driven than really political driven. I cannot see that at really, compared on a worldwide level, that Eastern Europe is doing so bad. Of course, there are issues that we see very critical, and it's good that there is a lot of critic and review on a lot of political issues. But on the other side, does it affect the business? Not really. And as Paul said, a VAT issue is a lot more interesting for us in our business plans than judges' age of retirement, even, if it has a big impact.
And to that point, before Paul goes, obviously Germany, I think it's the greatest barometer. Germany is our greatest partner in many areas, and looking at the transaction flows, they have been buying despite the change in power in Poland. They continue to buy, and looking at the pipeline for 2020, I think we'll see a stronger return of the core German money, which also gives you a feeling for that sentiment towards Poland. Obviously, we might have a bit of negative press, and I think this will continue as long as this government is in power. But this does not impact the more prudent thinking of the buyers. I think they understand that there are boundaries that will likely not be crossed. So we see the most passive core German money looking into Poland. I think actually 2020 will be an era of another strong push following a couple of years of say more dormant activity.
From what we're seeing, investors who come to Poland, the first question they ask is, what is the risk of Poland actually exiting the EU or going astray? And I think the risk they attach to that is zero, because they see the population as being very pro-European, and this hasn't changed. And it's unlikely that Poland will go its way, while the same question in Hungary elicits slightly different answers from investors. That's one. The second thing is, I think we're going to see more pressure from European institutions going forward. And we're already seeing the EU changing the way it deals with countries. Instead of this Article 5 that's been open for Poland for almost 2 years and nothing has come out of it, they're going through the European Court of Justice. That's a much more efficient way of dealing with countries. And so far, Poland has complied with everything that European Court of Justice has said. So that will always be a litmus test for a regime in the region.
Okay, good. Just one of the challenges that I think was also in Mark's presentation, whilst we're looking at the challenges that there might be, inflation came up, and also the increased cost of I suppose, construction, as well as the lack of labour, because there's such high employment across the region. Is that one of the sort of major challenges that people see going forward?
It's the construction pressures are amazing, more so in other markets than in Poland. Your unbelievably low unemployment, of course, is going to affect everything, all the way down to the smallest issues we have in our buildings here, that restaurants don't know how to stay in business when their competitors are coming in and hiring the entire staff away to pay them better salaries. And so as an owner of buildings, you have to consider, how do you factor in the risk of a certain type of tenant now? You don't have this in Vienna, for example, where everybody at the service level in restaurants is paid so ridiculously high anyway that you have to factor that into your business plan. So here, this is something that's come up with us in the past year, and it didn't happen just once, it happened twice, and it's very interesting to me from a business perspective.
I would also say that from an occupier standpoint, this is the major challenge, because obviously we have seen on Mark's slide that the wage gap is still significant. So obviously you can read in the Financial Times the articles about the business leaving Poland, but to my mind, I mean, the gap is substantial. So I think that the main challenge for the occupiers, and in turn I think also for our investment community, is really the shortage of labor. And I think you already see it in the net absorption numbers for 2019, or the preliminary numbers, where the absorption for the first time in quite a few years has decreased. Obviously, to an extent, this is the result of low vacancy rates, but at the same time, we're hearing from our clients that the qualified labor is just the main challenge, and I think this is the area that requires immediate addressing. Obviously, we see the movements from the UK in terms of the employment there, but I think this is one area where the government will need to really push on.
Okay, good. I just wanted to just loop back just a tiny little bit to the capital. You mentioned, Dan, that people should start to look for Latin American money. Just in the conversations before, we were talking about Chinese money. We've seen Japanese money coming in. Just a quick interesting thing from the Paris event, where one of the speakers there is representing Mitsubishi Capital money coming in, and said that he received a sort of sharp note overnight after the yellow vest that just had 3 words, which was "yellow jumpers explain." But Japanese capital, huge amounts of Japanese capital potentially in the wings. What's your sense of that, Dan, in terms of the new capital and the weight of capital? I mean, Piotr mentioned there that actually the dry powder trying to get into the market could have taken this even higher. What's your sense of who's waiting to enter this market?
I would like to use an analogy with QE, so this quantitative easing that central banks have been doing. And people are wondering why are they doing this? And one reason is obviously to help push yields lower, but also to push investors into types of assets that they never thought they would buy. So what QE did was drive investors that previously have been very risk averse into riskier assets, basically changing the perception of risk. And this is also happening for you. And I was talking yesterday with some people who were telling me, but this is still a very small market and it's very difficult to penetrate such a small market. Yes, it is. And actually liquidity and the size of the market is the biggest impediment for capital to come into these markets. Because although Poland is the largest market in the region, it's still small if you compare it to the large South American markets or even the Eastern Asian markets that are in population 2, 3, 4 times the size. But because investors have seen yields fall sharply in markets that they see very less risky, they will look for pockets of other markets, and Poland is one of these markets that they will very likely come to. Markets that they never thought of before. So you will see types of investments very likely that you haven't seen in the past. You cannot really compare it just because the market has been leveled up in the Eurozone.
Okay, good. And Justyna, in terms of the people that are coming to you looking for financing, are you seeing examples of different capital coming in? Because you'll also see those who are maybe the bids that didn't succeed, the people who are coming in and talking to you. What's your sense of the new capital, or is there changing capital looking at this market, particularly in Poland?
Sure. Well, indeed, Asian capital was #1 for, quite many recent months in general, but I believe we see a kind of a stabilization in this respect, and surprisingly, we are also seeing newcomers to this market who have not, made the decision to invest in Poland before. Currently, we are, for example, in discussions with some investors from Scandinavia, who, again, they are present in Europe, in Western Europe, and only now they decided to enter the Polish market. The other capital sources, again, Asia will remain in the picture, that's for sure. Yes, whether this will be now, I don't know, capital from Singapore, Philippines, this is of course difficult to say, probably also depending on the type of product that we have in focus. The other capital, of course, we are looking forward to seeing domestic capital, not necessarily domestic meaning CEE, but the Polish capital. As I hear, there are still efforts made to support the development, the introduction of institutional, let's say, or maybe a proper product for Polish people, just to be able to participate in the real estate investment, which would be, of course, perfect. And I do hope that it will materialize one day. But we are, again, as for the other capital sources, we have seen lots of activity of our, let's say, domestic players trying to attract or to convince newcomers to come to Poland. And they have succeeded, like, for example, Reino, who will be bringing Australian capital. Yeah, so I know that there are discussions with some others, investors of this type. So, yeah.
I mean, you introduce a point there, which is, I think, one of the interesting things from this year especially, whereas we'd had, when you were looking at platform purchases, company purchases, you'd got outside capital, Asian capital coming in, whereas what's interesting about recently, you've then had, with Wing making the purchase here, you're actually getting intra-regional capital, which was something we highlighted last year at this session, might be interesting to see develop. And also, I mean, at the CEE Summit, which we hold and will hold again this year, actually in November, we also had then EPRA there, who are beginning to talk far more again, I think, with the new government about the introduction of REIT legislation. But I mean, it's interesting that this market survives in essence on international capital, and that's not so true of the other markets. Piotr, do you see that as a potential weakness or an opportunity, I suppose?
Again, it's both, but bluntly speaking, I think it's a major weakness, and I have a struggle to really, just purely from a real estate perspective, to label Poland as a mature or developed market in an event where we just don't have domestic institutional capital. To an extent, I think it's priced into the yield. So I think the investment community appreciates the fact that this is the state of play, and obviously they price the assets accordingly. But I think that the Polish market continues to reinvent itself. So we have waves of capital, whether it's South Africa, whether it's Western Europe. Now we've got Asia. We hear Australia is just around the corner, perhaps Canada. But I think it will always be a struggle for some of the investors as long as we don't have domestic capital. And this question gets raised, I think, on every investment committee. I think it is an issue that I really hope that the government addresses, because I don't think we're going to be labelled a fully mature market unless we have domestic institutional money. And by also our discussions yesterday, it's clear that the pent-up wealth of individuals is substantial. So a vehicle to deploy that in real estate would be, I think, a very good initiative.
Okay, good. I wanted to focus a little bit on some of, I suppose, the more real estate fundamentals and also locations. So let's just look at some of the CEE markets and the comparisons. Obviously, Peter, you're investing in different jurisdictions here. When you're looking at those sectors, how are you seeing those develop for both the student housing and also for the senior living side? What are you looking for? Are you looking at particular cities, obviously university cities for the student housing? But how do you see those? And particularly when you're looking at Poland, which I think is interesting because it genuinely has large regional cities in comparison to certainly some of the other CEE countries.
Yeah, maybe just take this idea and the discussion on the local market. The regional cities, from our perspective, is always a little bit problematic because you don't have the local money. Yeah? once you have the local money, you can go also in smaller cities and so on. You see that in Germany, where you have really B and C cities, a huge investment volume still, because you have the local money and the local investors who can buy that at the end. So also international investors feel more comfortable to invest there because they know the asset is liquid if they want to sell it. Here you don't have it. If you go into smaller and smaller cities, then it gets more complicated. For student housing, of course, everywhere where university is interesting. We see it a little bit compared now to Prague, where you have 30, 50,000 foreign students, which have a total different budget for their living than Czech students have. So it's a different market. You cannot really compare that. In our 4 buildings, I think we have 70–80% is foreign students, and the rest is not domestic student, but it's more young professionals, locals who can afford to stay there and want to stay also in a more, let's say, cool environment than just rent a flat. In Poland, it will be a little bit different. You have also foreign students, but then you have from Ukraine or White Russia and so on. So it's a little bit different budget that we are calculating with. That's true? Okay. Yeah. And I think it will be in the future interesting to see how these markets will develop. We have today 3 developments for student housing here in Warsaw. We're looking at things in Katowice, in Krakow, and so on. But it's a niche market. Yeah, when you cannot really invest in the region 1 or 2 billion euros. In student housing will not work. Even if you take all the student house operators in one basket, I don't know. Do we really reach the 1 billion euro? I would doubt it. Each building is 10–15 million euros, maybe 20. You cannot really go in the city centers where you want to be to scale it up on a high level. So it's a niche market, and it will stay a niche market.
Okay, good. And Dan, from your perspective, how do you see that? Because obviously you've got capital cities in parts of the region that are smaller than some of the regional cities here in Poland. So how do you see that sort of investability, liquidity in the market side that Peter was just talking about?
I will just keep to what you said. Poland is an outlier in the region because of the cities it has. Whether they're large enough, I think investors know much better and builders know much better than I do. The questions we get for the region are usually Poland and a couple of other cities. And if we're talking about secondary cities outside Poland, maybe there are, I know, a handful, a couple in Czechia, maybe 3 in Romania, but they're all roughly half or a third the size of secondary cities in Poland. So I don't think that the current type of investor will go into the cities. Maybe, as I said, if they will be pushed to the fringes, if they really have to go bottom fishing, then they will also go to the cities, but it will take a while.
Okay, I'm just going to now deal with some of the questions that have just come in because I hadn't looked at my phone for the last 5 minutes, so apologies for that. So one is Ukraine on the international real estate radar screen at the moment? So let's have a look at the countries. Ukraine. Anybody investing in Ukraine, thinking about Ukraine? That seems not such good news for Ukraine at the moment. Okay, interesting. And would you have done, given that if it was 10 years ago, would you have been looking there? Was international capital looking at that point, Piotr?
To my knowledge, yes. So we actually even did a deal, a logistics deal in Ukraine in 2007 or 8. So yes, that's the case. Maybe I met one big private equity fund a couple of weeks ago, and they've got an office project in Kiev, and apparently it's going well, leasing wise. But other than that, it's a drop in the ocean. I think the investors would rather circumvent Ukraine and focus on other markets where there's still opportunities. But the risk is disproportionate.
Okay, good. And looking at the cities, Paul. I mean, how do you compare Bucharest, Budapest, Warsaw, and some of the other cities? Whether that's Sofia, whether it's how do you see those? You're obviously deciding where to invest, where the opportunities are for you. So what's that led you to in terms of the cities?
So at the moment, we are in CEE. We are strictly Warsaw, Prague, Budapest. Looking at Ljubljana and Bratislava. That's our whole focus at the moment. Once we're ramped up in Warsaw, we can go to Krakow. When the company first started 4 years ago, I spent quite a lot of time in Bucharest because I really like Bucharest. It's a fascinating city. Taking everything into consideration, nobody was asking us to invest at the time in Bucharest. So we're still waiting for those calls.
Okay, and you're not saying that just because Dan is actually from Romania. That's not good. Let's look a little. Let's look a little bit at some of the sectors, and I'm going to start with Elio's question, which is why is the parking investment and operation market in major cities in Poland so neglected? Tricky one. Does anybody want to tackle that? That's going to have to be for you, Piotr, I think.
Figured it out. I think it's. I'll just deflect the question. It really is a question to the municipalities and the cities. I think that the way it's completely mismanaged is mind-boggling. But sadly, Richard, I do not have the answer. Hopefully, this will get rectified pretty soon because it is an embarrassment, in my opinion.
Okay, and unlikely to change soon, by the sounds of it.
That's correct.
Okay, all right, interesting. And let's look at the office markets as well. I mean, there's been a substantial change in terms of the office here, for example, but also design. You've got sustainability issues, ESG, wellness coming through, and that's been one of the big topics in the Outlook sessions that we've done in London, Paris, and Frankfurt. Was also how this is beginning to influence what the occupiers are looking for, what the workers are looking for, and the brand association for those businesses, which is if they want to attract the right people, then the offices have to be right, and they have to also be sustainable, all of those things. And that was seen there as actually an opportunity, potentially, to be able to bring up to standard and be paid for it for a number of these assets. That was something that was being looked at in those cities. Is that something that you think is also applicable to the markets here? Are people looking and willing to pay for higher quality, more sustainable, better office space?
I think that there is no alternative. Clearly, the way the market is shaped these days, it's purely employee-driven. So I think we're well ahead of the pack, ahead of the curve. If you look at some of the offices in Poland, or in fact in Bucharest and Budapest, I would put them against anything that's out there in Western Europe. I think we are. Also, due to the fact that the market is so young, the quality of stock is tremendous. It's really superb. So I think we are more setting the trends rather than following them.
Okay, good. And I'd like to say that I am still genuinely excited on returning to Warsaw that when we've put Christmas away in a box in London, that actually Warsaw is still doing Christmas. And so for whoever anonymous put that in, I still genuinely am and took photos of it last night. So that's my take on Christmas. Let's also look at retail. Retail has had a very negative kind of view, and obviously the macro side of that is that people are looking at the increase in e-commerce and also people beginning to move investments into logistics and not so much retail. But how do you see that? Do you think it could be the start of a more positive turn for retail? Does anybody have any views on that?
It depends how you define positive, because I think last year was totally dormant. But we see sprouts, we see some opportunistic deals, we see some buyers that actually feel that the underlying asset value has gone so low, they're more than happy to take a look at it. We've got a few transactions going on at the moment with purely opportunistic capital. On the other side of the spectrum, you have the super core properties, so the dominant shopping centers, and I think we'll hear about a couple of big deals this year that will continue to trade. But the biggest challenge really is the middle ground where the quality of the asset is not dominant enough. But I think we had like €500 million in closed deals last year. A lot of it was either legacy of documentation agreed previously or really more value-add transactions. I think this year will be... to put it this way, the activity will be higher, but it will not necessarily mean that the market is bouncing back. Rather, we'll see buyers that see opportunities.
Okay, and does that mean that when we look at logistics, that's still set to grow? I mean, there's a huge amount of interest, a huge amount of dry powder looking at that sector.
Yeah, I think this doesn't change. It's a powerhouse in its own right. Logistics will continue to thrive. The biggest change year on year we've seen in offices, where I think the demand is across the place, and this is reflected in the number of transactions, because I think this is how also we measure the liquidity of Poland. So in 2018 we had 100 deals that closed. Last year, based on preliminary numbers, we had 150. So the average ticket size has decreased, but there is much more liquidity, and 75-77% out of it is industrial, logistics, and office.
Okay, good. And I mean, interestingly, so the sort of ULI, PwC trends, logistics was right up there, and pretty much everything else was then either residential or beds in some form, whether that's healthcare, whether it's senior living, student housing, all of that sectors. Question here, which has come in, which is there any momentum in capital flows into the PRS market in smaller local Polish markets? I mean, PRS should be, across all markets to some extent, but is there much momentum into that?
We are today investing also in Gdansk and Krakow. Yeah? I would not say this is a smaller market. We're looking also at other cities, but when it gets too small, what I mentioned before, the problem is really the liquidity and the comfort of the investor to get out of the investment in 5, 10, whatever years when he wants to. And as long as the local market is not really, the local money is not present, and you don't have any comparables, I think it will be hard for institutional money to go into these local markets. Yeah.
It's all about liquidity, and obviously I think Poland, the liquidity, as I mentioned previously, improves, and the likes of Wrocław are probably the best examples. For Bucharest, I think actually the same will come. You're lagging quite a bit, but I think there are a few clever investors that actually are lining up to buy in Bucharest. So the liquidity will come, but it's a very, very slow process. So I can understand that the concerns of the investors have. But just like Wrocław, which I think is after Warsaw is the second largest and second most liquid market, this will transpire to other markets. I think apart from Kraków, Katowice is probably the market that I would put my money on. I think it's gonna enjoy tremendous growth in the short to mid term.
Okay, good. And just as a general trend, the whole kind of carbon neutral, sustainability, those aspects really have come high up. And it looks as though there's going to be both regulation, but also there's definitely a drive from capital sources, from pension funds, not only to be investing in things that are sustainable, but also, for example, in 2019, I probably had the question, what about impact investment, come up around 10 times, whereas that had not come up at all before. So these kinds of trends coming in, how important are those for you? I mean, there's green financing, obviously. How important are these generally, and this is for anybody, do you see that as a major trend for not only this year, but for the next 10 years?
For sure, I mean, sustainability and all the green-related topics are, I believe, for in all the real estate-related sectors right now, one of the highest priorities. Well, from the lender's perspective, of course, Poland is quite a specific market, as Piotr said. The market is quite new, so every new building is just a green building. So for us, it's kind of an obvious thing. But if you compare this with the other markets, where green, a sustainable green building is really a kind of a huge advantage. Again, whereas for us, it's an obvious thing. So I think this is just in general a total different thinking. Yes, and this will be definitely the trend for the future.
Okay, good. I mean, one of the views was that for most industries, actually, it's going to involve additional cost. So it's a downside for almost everybody. If you look at the aircraft, automotive industries, other real assets, but actually when you look at real estate, it's an opportunity to change a whole number of things and improve them and rent them out at higher prices. So it's actually an opportunity, was the view. Just one last question that's come in here that I'll tackle on logistics, which is, logistics will continue to grow, but how can developers make a profit on €2 per square metre rents if construction costs grow? So we talked a little bit about construction costs, but interestingly in the logistics side, that may be a real issue alongside actually having employees. Any views on that, Piotr?
I think it's the capital value appreciation for one. I think that if you look at the yield curve and we see how pricing has moved over the last 24 months, it's clear to see that the substantial demand really is driving pricing up. So I think we also see it on the office side where the returns are not necessarily made through rental movements, but we see really sharp yield downward adjustments. And I think probably if you look at the benchmark yields in the logistics sector last year, this is probably the most prominent, just followed by offices. The yields continue to move in amid competition. So there are other ways to just to make a return on your investment, and this really is the investor demand.
Okay, good. And in general, do people see rents going up this year? What's the potential for rental increase in whatever sector you're involved in? Do we see that do we see rents staying flat?
Well, in some selected cases, yes, but I think the incentive packages are shrinking. But in general, both on the industrial and office markets, the consensus is that the markets are tight. And yeah, this will potentially, to an extent, translate into rent. But as I mentioned previously, this doesn't necessarily have to be the case. I spoke to a major office developer last night, and he was clear he doesn't have to move the rental tone. He can just tweak the yield in his spreadsheet, because after the outcome of the bidding process that he runs is such that the bids he got in are outperforming the targets by 50 basis points. So there you go.
Just want to ask one last question, which is focused on the investment. We also always ask this, which is, having looked at all this and discussed it, what does it mean in terms of opportunities? So when you're looking at the market, and we'll start with you, Dan, where do you see, if you were a real estate investor, what does all this picture mean in terms of either locations or sectors that you think are most likely to outperform? You can stick to countries, should you wish, whichever is your preference.
I will first want to mention, because you talked about green projects, I would like to mention green financing. Probably you don't realize the appetite for this kind of investment from large investors. And the good thing is that you can have a green bond for much smaller size than a normal one. There are all these green funds out there in London and the US waiting for projects like that. So if you're thinking about something like that, you would find financing far easier than for regular projects. And I think that will be something we'll see developing, because we're also pushing for any type of green project that we can market, and we're finding demand for those bonds immediately. So that would be one thing. The second thing, in the region, I think the countries where people expect the economy to be more stable are the countries that are going to outperform in the markets. I'm not going to go into market segments because I know far less than these guys here. But from our point of view, currency performance and the economic performance in general matter a lot. We're thinking that rates are likely to go lower in Czechia, for example, this year. So that might give a boost to the market at the end of the business cycle. And as I said, I think if it wasn't clear, Poland is our top choice in economics this year across the region, and it's going to stay like that.
Okay, good. Paul?
Just speaking about Poland, I think what we will see is what we saw last year, that Poland is a safe haven for our money. We will continue to look at areas outside the CBD, so interesting areas that are well located. Our profile is sort of as a boutique company, smaller office building aside, but we'll go also continue looking into housing and maybe logistics as well. We started looking at that more heavily about 4 months ago, and that could be really interesting for us.
Justyna?
Well, from a lender's perspective, obviously, we will, of course, stay focused on the Polish market, on the traditional market segments, just because from a German bank perspective, the market in Poland, as for the alternative asset classes, is not mature enough. It's just starting, so we will just be observing the others and see how the market develops in the future. And of course, coming back again to the green topic for us, of course, that a building, a project that we are financing is a green is just a must. There are no other possibilities from our perspective in the Polish market.
Great.
Yeah, for us also, Poland is definitely a focus. The focus. We want to go more in regional cities, more invest in Gdańsk and maybe Wrocław and Krakow definitely. Personally, I think offices in the city centers in Prague will be very interesting if you find the right location. And also offices in secondary cities in Poland. I think this is also something we will have an eye on. In Warsaw, it's not so easy, but I think in other cities could be really interesting.
Yeah, I would second that. What Peter is saying is that I think Warsaw is very competitive, very difficult to get opportunistic deals. The value-add deals that some people are looking at are probably more core plus deals. A lot of buyers. I would go to regional cities. Peter mentioned Wrocław and Kraków. I would go in between. I think Katowice, looking at the yield spread over Wrocław or Kraków is tremendous opportunity, and it's clear that the city is going from strength to strength. And going outside of Poland, I would definitely do Bucharest. I think we'll hear a few big announcements this year in terms of really landscape-changing deals, hopefully in the first quarter. So I think this will be really the impetus for the more core buyers to start looking very closely at Romania and Bucharest in particular, but also Cluj, Timișoara, I think backs of potential there.